Hi, good friends. Welcome. So, at this point, I'm presenting to you the format of the class test. I'll do the same thing during the exam so that you will know the format and the structure. Okay. So, it's the same thing we've discussed in class. And of course, like we said, it covers the first 4 weeks of the class. Okay. We're looking at a conceptual framework. A question will come on that. I'll not tell you the details of that aspect. It's required of us as accountants to be abreast with the conceptual framework. You got to read that one on your own, okay? Then we have IAS 38, the intangibles. Intangibles, okay? We've done one in class, and if you've practiced the tutorial questions or any past questions on, if you've read the books, if you have the cortex and you've read it, you should be confident enough to tackle that one. Then we're looking at the consolidated accounts. Okay, so I'll share PowerPoint slide with you to know the specifics of these. All right. Very brief, straight to the point. Okay. So here we go. Here we go. Here we go. Let me make this slide share. Oh, something is wrong. I cannot see what is happening. This is not good. Okay, let me try. All right, so there we go. Okay, so here we have it. So in the very first instance, we have three compulsory questions worth 100%. It's a blend of computations and theory, okay? So this is a breakdown. You have one question. So this is a breakdown. You have one question. Let me connect my interactive pen for the meantime. So we have one question which is centered on group accounts, okay? So your IFRS 10 comes in handy. And of course, we cannot do without IFRS 3, okay, on the goodwill, okay? So it's in two parts where you prepare consolidated statement of profit and loss. You prepare it, you do the calculations and prepare. And then a consolidated statement of financial position, and it's worth 60 marks. Okay. Then we have one question on the intangibles, which is worth 31. And then a simple question on the conceptual framework. Okay. Let's move on. So on the consolidated accounts, what are we supposed to do? Normally, you will see in the questions, will tell you that X or parent owned 40%, owned 70%, owned 80%. Here, we will not give you the percentage holding. You must determine the shareholding that has been acquired. Okay, use the number of shares. So if the company has acquired, let's say 5 million shares, okay, out of let's say 7 million shares, then you can easily express 5/7 and get a percentage holding. Okay, 5 million over 7, get a percentage holding. So that's the first point. You determine the structure, the parent holding, and subtract it from 100%, you get a non-controlling interest holding. Okay, that is it. Very simple. The next thing is also to look out for the purchase consideration. You would have seen previously where we say parent acquired 80% of the subsidiary for 12 million. That's the cash consideration. 12 million. Here, you'll not be given the amount. Okay, you'll not be given the amount. Look at the question, did we specify cash payment? Then that is straightforward. You pick it, okay, as the first item. If there is a share for share exchange, then you have to calculate maybe 2 for 3 shares, okay? Multiply it by the percentage holding if it was 70%, okay? If it is 70% shareholding times the total shareholding that they acquired, okay? So if I assume it is 100% shareholding, 100 million shares, okay, then you multiply it at the market value of the shares of who? Of the parent. This will give you the share exchange. Okay. Is there any deferred cash? Use the discount rate and the time value of money, where you multiply the amount, okay, times what? 1 over the discounting factor, okay, 1 plus the rate to the power n. You know this from your financial management. You should know this, okay. And here in this class test, we've not given any loan notes issue, so you can you can relax on that. Okay, look out for the share exchange, deferred cash payment, any. But there are no loan notes. I'm assuring you, there are no loan notes here. Okay. Now, again, there are footnotes which we should look out for. So I'm going to take you through step by step the footnotes that you should look out for. Okay. At least it gives you and where to focus on and what to look out for. So you determine the fair value of any non-current assets like a PPE. Okay. So there's a fair value adjustment. You need to include it and consider it when calculating the identifiable net assets of the subsidiary. Please take note of that. You need to look at it. It is not always that the PPE or the non-current asset value increase. Sometimes the values increase and decrease. Okay, sometimes what is in the books, in the not in the carrying amount in the books could be higher than the actual value of the market value of the asset. What do you do? We've always seen, or usually we have seen, where the market value is higher than the book value. Sometimes it can be the other way around. You just flip the calculations upside down. Okay. So again, once you know the PPE net fair value adjustment, you know there's always a depreciation you look out for, straight line, and then you know what to do with that. So consider the PPE fair value adjustment. Okay. Again, consider the provision for unrealized profit on non-current assets if it is sold from the subsidiary to the parent or parent to the subsidiary. Okay. Do recognize that pop and then get ready for it of it from whose income the person has recognized it. If it's a subsidiary, get it out from his books. If it's the parent who sold, get it out from his retained earnings. Okay. And then look at subtracting this item also from the face of the statement of financial position. Okay. Again, assess the retained earnings. Again, you would have seen that questions will say parent acquired 80% of the subsidiary when the subsidiary's retained earnings was this. Here, there's a little trick here. You'll see that the retained earnings is made up of two items, two figures. One is stated in the financial statement, and the second one is stated in the footnote. Okay, so in the financial statement, you see an opening balance there for the subsidiary. But in the footnote, you see clearly stated that at the date of acquisition, the subsidiary had also made a certain amount of retained earnings or loss. Okay, look at it. Then you have to add it to the opening and then you can get the retained earnings. Look at it. Okay, we've done examples of this in class, so this is nothing new. Examples in the tutorial, couple of them in the past questions I've uploaded, no nothing new. Okay, let's move on. Again, on the workings, as usual, you will determine an intragroup trading balances and reverse them when you are preparing the statement of financial position. Okay, we also look at for investment in associate. These are all within week 4. Investment within the 4 weeks, yes, especially in week 4. Now, listen, in terms of associates, it's just 2 items we need. It's just 2 items. This is not a lot of work. It's just 2 items. You focus on just these 2 items. One, what is the investment in associates? That's all. You calculate it, present it on the statement of financial position. And the second one is what is the share of the parent's profits in the associates? Present it in the statement of profit and loss and adjust it in the group reserve. These are only 2. It takes you less than 3 minutes to calculate this. Okay, less than 3 minutes to calculate this. So this is not a lot of work, just those 2 items, which we looked at in week 4. Okay. Again, there's a revenue amount when you are preparing the statement of profit or loss. There's a revenue amount. Remember what happens here in terms of the revenue amount. Just a second. Let me try and get this up and going. So what happens in the statement of profit and loss? Okay. Take my pen, will work. Okay. You realize that there's a revenue, and sometimes the parent may be charging the subsidiary some management fee because they are providing them with some services. Look at that one. Adjust it. Okay. And sometimes you see the subsidiary including this management fee or consultancy fee in the administrative expenses, in the operating expenses. Go and get it out of the operating or administrative expenses, and then go and get it out from the revenue figure. Very simple. Very simple. Non-controlling interest, as usual, we know how to calculate it, okay? The first thing here, non-controlling interest is not valued at a fair value. Sometimes parents will tell you that it is valued at a fair value of 12 million. No. Here, we are told that it is calculated at the proportionate share. Proportionate share. So if they own 30% of the whole company, then it is 30%. Okay, 30% of the fair value of the identifiable net assets of the subsidiary. Okay, so be careful here. If you don't get the net assets of the subsidiary correct, your NCI will be wrong. Your NCI will be wrong. So you must make sure you get the fair value of the net assets of the subsidiary correct. Then your NCI will be correct. Carefully calculate that item. Other key points. This is a mid-year acquisition, so you need to prorate it. Be careful. At the day they acquired it and the year end of the subsidiary, how many months? And you need to prorate it. Okay, prorate it. Even the profit and loss account, you need to prorate that of the subsidiary. The parent's own is okay, but the subsidiary, you need to prorate it. Okay, all right. Other points. Goodwill has impairment. When there is impairment of goodwill, we share it. We share the impairment between the NCI and then the parent. Okay. Again, shares were issued at a value above the par amount of the parent. So there's a share premium there. You must recognize the share premium. The parent share capital will also increase by the amount of shares they have issued to acquire the company. You must also include that one. I'll give you examples and you see. And then again, the deferred cash payment should be recognized as a long-term or a non-current liability on the face of the statement of financial position. All right, good. Then you prepare the financial statement of profit and loss, okay? All that I want you to look at is that after you've done all your calculations, please clearly indicate the amount of profits attributable to who? The parent. And the amount of profit attributable to the non-controlling interest. Okay. Now, what I want to advise is that when preparing these financial statements, especially the statement of financial position, it is not about getting the balance sheet to balance. No. It's not about getting the statement of financial position to balance. Your focus should be about getting much of the transactions correct. That is my headache. Get much of the transactions correct. And that is it. Okay. It's not about balancing. Balancing is not what we are interested in. When you are showing your calculation, you can use any format, any layout to show your calculation. That is okay by all of us. However, when you are presenting your consolidated statement of financial position, your consolidated statement of profit and loss, please use the prescribed format by the International Accounting Standards Boards, the IASB, the IFRS. You cannot start preparing profit and loss and start with operating profit before you come to revenue, before you get to gross profit. No, it follows a sequential order. You cannot prepare statement of financial position and start with equity before you come to current asset, before you get to current liabilities. No, you have to follow the prescribed format. But in working, your calculation, your working, your rough works, use any format. You can use the ACCA approach. You can use a different alternative approach. Any approach you want to use for the layout for the calculation, that is your choice. Okay, we will not penalize you for that. All right. And then on the question on the IAS 38, okay, so simple. Of course, the main focus will be differentiating between research and development costs and giving good examples, appropriate examples to support your discussion. Okay, what will give rise for me to recognize or not to capitalize the development cost? What will give rise? What should I look out for? Okay, if there are any administrative charges associated with implementing or executing the development of a product, or if I've developed something and I need to get some training, legal fees, registration cost of this developed item, do I need to recognize them? How do I treat them? Okay, this is what we're looking at for over here. Finally, on the conceptual framework, like I said, it's an assignment to you. Read the conceptual framework. I'm not going to highlight specifically what is there. You find conceptual framework again as part of your compulsory question in the final exams. You will always be examined on conceptual framework. No two ways about that. Okay, no two ways about that. Read it and you'll be fine. Examples I want you to look at. Many of you are calling out and asking, which example should I look out for to guide me? Okay, there are tons and tons of examples online. When you go to the Moodle page, I have made accessible to you past questions. Now, these past questions, especially the compulsory questions, if you have practiced them, the solutions are there. Friends, you are gone. You are done. If you practice the past questions, some of you are asking, I need a past class test questions. Past class test questions were MCQs, multiple choice. And even with the multiple choice, there are calculations. And I've given you an example of a past class test, which is multiple choice. You calculate and you see them, okay? This time, we are not doing multiple choice. We are presenting our work. It's the same multiple choice we are pulling together in a consolidated format, okay? But if you go online, there's a class test. There's a class test given shown over there. Okay, the MCQs, do the calculations. There is an exams, a whole set of questions and the past questions. If you are looking at only the consolidated portion to revise, you will even see IAS 38 questions there. You will even see conceptual framework questions there. If you practice them, you're okay. If you think that's a lot of work for you, our tutorial questions, revise these ones. Paradigm and straighter question. Look at it. Practice it. The question on PICOS and SOL. The question on piquant. Okay. The question on highway. Okay. And then there's a question on ER. Okay. Is there. All of this will give you a fair view. You'll find this in the ACCA text as well, okay? But you find it on the tutorial website, as part of the tutorial. And I think you have this in Elliott and Elliott, okay? Elliott and Elliott, okay? And in fact, I think you'll still find this in Elliott and Elliott, okay? Elliott and Elliott. You still find paradigm and shift in Elliott and Elliott, and you still find it in Alexander's book, okay? Alexander and his colleagues. So you still find it there. Piquant is ACCA, but I think you can still find it in Elliott and Elliott, if I'm not mistaken. It's either Elliott and Elliott or Alexander Jorison, but you still find it on the tutorial site. Okay, there's a question on highway, and that's purely Elliott and Elliott. Okay, so on and so forth. Again, the lecture slides on how to calculate purchase consideration would be very useful to you if you have any questions on how to calculate the purchase consideration. Friends, I leave it here. And I'll see you when I see you. So all that I'm saying is that practice. Examples of questions you could practice and narrow down your study to. So that at the end of the day, you'll be on top of the game. It's online. If you've not been engaging with the slides, with the tutorial questions, there's nothing I can do. Okay, there's nothing I can do. All right. Okay, I'll see you. If you have any questions, consult your tutors, your lecturers, and they will surely help you out. Thanks and bye for now. Good luck.